Is this the end of the bull run or just a pullback before we continue our way up? What is the impact of the current US job data on the Bitcoin price? We are going to talk about what I expect for the rest of this cycle and how we can prepare for the economic calendar of next week. Welcome to Bitcoin Predator. Hit the like button and subscribe. So during this last week, we can notice a Bitcoin price behaving just like Bitcoin used to be, consolidating like a falling wedge, and eventually I am waiting for more consolidation before continuing to the upside. If we zoom out and analyze at what stage we are at in this cycle, we can say that we still have some room to continue our way up, and we are still not yet in the window of what I call the peak. After a quite choppy week, we had a couple of news that did not help Bitcoin price to continue its way up, and at the end of the week, plus with the geopolitical tensions, the price dumped around 3%. On the daily time frame, I can see we had a fair value gap that was completely filled right yesterday on Friday. And if we zoom in into the 4-hour time frame, I can see a couple of points of interest in which you can prepare for the next trade. And again, this is just my personal opinion, this is not financial advice. And if you take a look at right here on the left side, we have a huge volume that has been pushed the price to the upside. So this will make a quite interesting point of interest. So we can actually refine this order block right here at the 111 and 110,000 level as a good opportunity for the price to continue its way down, grabbing liquidity, and then eventually spiking to the upside. However, based on Bitcoin price behavior from previous times, I don't think the price will get this low. Maybe just like we did right here from May until July, I think the price will get a similar behavior and will not get as low from the last previous resistance. So I think the price will get this further low right here, and then maybe a quick liquidity sweep to the downside at around this region, but not closing the daily candle, and then yes, continuing the way up. When we zoom in into the 1-hour time frame, we can see lower highs and lower lows being formed as we speak. However, we did not see still a considered break of structure in order to have a good confirmation that the price actually stopped consolidating and get enough liquidity before continuing its way up to the upside. Plus, take into consideration that we are about to start the weekend, and that's when only retail starts to trade and liquidity is even more accumulated on both up and downsides. On Thursday and Friday, we already have a lot of liquidation from the downside already taken, and that meant that liquidation to the upside is now being formed, and you know what's going to happen. Eventually, the price will look for liquidity, and more liquidity is being accumulated on the upside. And since big institutions do not trade on weekends, I think that's going to be even more liquidation from the retail traders to be accumulated when they are over leveraged, when they believe that the market is over, they believe now they were bearish, so on and so forth. Liquidation is going to form right here on the upside, and then yes, next week price will go up. Now, this drop in Bitcoin price today makes a difference when we talk about the 60 daily cycle theory. Previously, we believed that at around this time right here, June 22nd, at around 98,000 level, this was marking the previous 60-day cycle low, which was going to make the next daily cycle at around this region right here on August 21st. But we also have to consider that this last daily cycle low on June 5th was more convincing from the previous daily cycles. And because of such big drop in Bitcoin price, we still have to consider this previous daily cycle low as the more validated, which was going to make this next cycle as we speak right now between July 29 and August 10. And this validation is also confirmed because, as you can see right here on the chart, it makes the prices still right translated in a really strong manner. And I get even more convinced when I look at the RSI. because from what we see right here, this was when the previous daily cycle that we are still making sure it is actually validated happened. And then look at this, right in this window, look how much the RSI went further down, as further as the 43 level. So after this behavior right here, I think it is quite possible that the RSI will continue going up, and then we are going to get the next overbought level. Nevertheless, the biggest confluence that we have right now is the M2 Global Liquidity Index and the M2 Global Liquidity Growth or contracting rate. I still hold my case that based on the previous cycles from previous years, this is the window that we're gonna have the peak of this bull run. In addition to that, we also have the growth rate of the M2 Global Liquidity that, although it seems like we had a short drop right here, but it's still, as long as it is above zero, it means that the rate is still positive, meaning there is still liquidity coming into the market. We can start to have some price contraction or some liquidity contraction as soon as this rate crosses below the zero line, which is not the case right now, and we still have a lot of room to go. So yeah, I still think we are going to continue growing up before the start of the bear market. And as you guys know, it is quite common for Bitcoin price to drop sometimes even 10% or more in one day. But some influencers on Twitter, they are not real traders. They start to panic as soon as they see the Bitcoin price go further down. I do not follow these people. I do not take advice from them, because it shows they are completely taken by emotions. When you see price behavior from Bitcoin, you have to always be cold-blooded. Just stop and think, observe the price, take your metrics into place, analyze the charts, and then make a cold, rational conclusion. This is how you should approach when you see price chopping on Bitcoin. And now we're gonna have to talk about the data that shocked the entire market, the US non-farm payrolls. And why was this time different? It's simple. If you take a look at the Fed, Jerome Powell speeches from previous meetings, he was always stating labor market is strong, economy is still okay, and inflation is under control. So there is no reason for rate cuts. And part of the data that the Fed uses in order to evaluate how the labor market is going is the non-farm payrolls, which measures the number of people employed during the previous months. And if you take a look from previous data, you're going to see that most of that number was above 100. Maybe on a downtrend, but nevertheless quite stable. But the problem is that right now, this previous month was reevaluated. And those adjustments take place every time a new data is released. But if you take a look at the previous reevaluations, they are not too far from the previous data that was gathered. But the problem right now is that we have a reevaluation of over 100,000. Guys, this is a lot. And in addition to that, the actual non-farm payroll for this month was 73K. It starts to raise questions of how accurate is this data? Will the next one be even lower? So this pretty much means that the labor market might not be as good as the Fed thinks. And this is exactly what made the rate cut probabilities for September to spike to 80%. Because the Fed has a dual mandate. They have to keep inflation under control, but they have to keep economic growth and a healthy labor market. And what happened right now was a punch in the face. So a weakening labor market means that it is more pressure on the Fed to cut rates soon. And whenever we talk about inflation, we also have to consider trueflation, as we can see right here, is clearly on a downtrend. And recently it has just had a sharp drop to 1.67%. It seems like since the beginning of the tariffs policy on April, the tariffs have not had such an impact on inflation as everyone was expecting. So, besides the weakening labor market, inflation is also under control. So that's the second factor that makes the Fed lower interest rates. And you see all over the news that the US government is trying to attack the Fed in every way they can. This right here is the resignation of Adriana from the Federal Reserve Board. This kind of information brings uncertainty into the markets and can give a couple of signals that the Fed is actually losing its strength. And in addition to that, we also have the increased liquidity from the Fed from the buybacks of the Treasury debt. So the Fed is buying back the US debt that nobody wants to buy, which means that more liquidity is being injected into the markets. And this is exactly because that although we are starting August on negative from the price drop, we also have to consider the previous cycles and the overall economic activity. We had a very good behavior on July, and from the previous cycle on the third bull run, which happened in 2021, we can see that both July and August had a really good behavior. So I still think there's a high chance that August is going to be a bullish month for Bitcoin. Because of the news and all the tensions and economic data that was released this week, we can see some outflows of Bitcoin from the ETFs, but this is a point in time we have to consider watching over the next few days. And we still have the Bitcoin Exchange Reserve continuing its way down. It had a little bit to the upside right now, but still nevertheless, it is trending down as Bitcoin is more and more demanded. Another confirmation that we still have a good way to go up is the fact that the Crypto Fear and Greed Index is right now on the neutral level. So we have hit the greed level, and then after all the news and economic data, right now we are back on the neutral. And I'm still expecting this index to continue its way up until the extreme greed, until that I can consider closing my positions. MVRVZ score is still going to the upside as we expect, and I still think although the spike might be a little bit lower this year, we still have some room for a squeeze before the end of this bull cycle. What we should be attentive to next week, however, is the S&P PMI that's going to happen on Tuesday. And I think this one is going to be the most significant, the initial jobless claims, which is going to happen on Thursday, August 7.